So we've seen an unwind, a downturn, a correction, however you want to say it, in the Bitcoin Treasury company space in the past few months. We had the big pipe unlock for Sequans, which drove prices down as pipe investors were selling shares when they became unlocked. Same thing seems to have happened to Naka in the midst of a more general downturn as well in Bitcoin Treasury stock prices. This, Ben, I would love to hear your thinking on like where is this sector? Some called for this is the kind of the death of this idea. It's only going to be a few companies. We have this merger now taking place, some consolidation, and we see that maybe that's the path that will be taken. And it's not just one or two or three companies, but maybe it's a smaller handful, and there's going to be a consolidation of companies that are working on this strategy. Do you think there's a minimum effective value or size for these Bitcoin treasury companies moving forward?
Yeah, I think calling what happened a correction is very generous. This has been a pretty solid bloodbath all around. I think people are starting to feel that. These
Yeah,
are
fair.
certainly the moments where if you're any type of an investor in this space, your conviction's going to get tested for sure. But I think that the positive side of where we're at is any froth that was in this market is gone. And a part of that is certainly the trend really started late June. If you kind of look at the broader macro drawdown in the treasury companies, Metaplanet kind of started drawing down late June. It's accelerated through July and through August. And it's just been, there's been no magic bullet that anybody had to stop capital from rotating out of the sector for that period of time. So now when you look across this industry, you really don't see massive premiums built into these anymore. And a lot of that is certainly going to be around what's been happening in Bitcoin. Obviously, Bitcoin kind of went stagnant and now it's ground down. I think we're just over 110 right now, which it's a little funny that at 110, people are feeling so bearish on Bitcoin going into historically the most bullish quarter of the cycle for Bitcoin. But that's where we're at. And these are the times where you really have to reset and reevaluate where you want to be positioned, what types of companies you think have the best strategy to execute over the next several years, and you position yourself for long-term investments. I've said a few times, the one thing that I think was probably a negative broadly in the market as treasury companies really rose in prevalence is that it undid some of the investing thesis that people had around Bitcoin. We had all trained ourselves to be incredibly long term in our thinking. We thought in terms of 4-year cycles. And when it comes to now equities that are trading on balance sheets filled with that same asset, right, which should allow them to perform very well over full cycles and over long periods of time, people are applying trading mentality to it. Several of these companies have been around for 3 months, 6 months, if we're generous for a few of them. This has been incredibly short term, and you're already seeing people calling for it to be over, and these companies are dead, and the strategy didn't work. And I think that just tells you where the sentiment is right now. In terms of where I think the industry's going, I think what just happened with Strive and with Semler really is going to pique the interest of a lot of investors because before this transaction happened, everyone looked at trading below NAV as this death blow to a company. And what you're seeing now is that when you have an entire industry that's built up around building balance sheets filled with Bitcoin and understanding that there's a lot of benefits to scale in this space, it starts to create different value propositions for those. So I think it'll actually ultimately raise the floor for a lot of these companies because now the conversation's not going to shift to it's dead and over and this company has no more moves. Now it's going to start on the speculation of is this an acquisition target? That'll bring investors in alone on that speculation. So I think that's going to be a very interesting development. And I think it's going to help this industry in general because to Jeff's point, when you're doing M&A in this space, it's a very different mentality that you're operating from, right? It's not the traditional fiat structures. What you're really looking at is when we combine these companies, one, for the acquirer, are you building up that asset floor, that NAV floor for your shareholders? And on the other side, you're looking at when we combine, do we have more power together than we have alone? If our shareholders are fully on board with this Bitcoin treasury strategy, which most are going to be, because that's the entire reason you would invest in most of these companies. When they look at the end result of a transaction like the Strive and Semler, you start to see what they can do in the credit markets that they couldn't do if they both stayed at their respective sizes. They were fairly similar sized companies all in. Strive had a little more Bitcoin than Semler did. I think Semler had 5,021. But the combination, when you're getting closer to 11,000 Bitcoin, that gives you a huge amount of leverage capacity that you can now take out to the credit markets and really tailor products into there. I love
So there is that minimum effective size kind of thing. You think it might be around 5 figures of Bitcoin?
I think that's when you're getting into the optimal size. It
Yeah.
doesn't necessarily mean every company is going to get there before they can access the preferred markets, but
Right.
I think it's ideal.
Okay.
You want to be out there where you can raise at the institutional levels, right? You're raising 9 figures plus in capital through these preferred offerings. I think that's the sweet spot that you want to get to. Before, I'd kind of set around $1 billion. Probably post raise. If you're $1 billion post raise and you can manage your leverage, that's probably an effective size to be able to go into the preferred markets. So doing these acquisitions is fast track to that. And I think other companies are going to start looking at it now. I don't think this is going to be the last acquisition you're going to see in this space, but I certainly think it's going to serve as the case study that most of these other companies are going to use when they start evaluating M&A activity and any targets that they may be looking at.
It does feel like the beginning of a trend for sure in the space.
Which might mean we end up with significantly less treasury companies than it looks like we are right now.
Yep.
There's going to be a lot that struggle for the scale, and these are going to be the periods that start to separate these companies. Because I think what you've seen right now is, because there's a recognition that these companies need to achieve scale on the balance sheet, there's been a willingness and almost an expectation of massive equity issuance in the early days. The same thing that strategy tends to get most of its heat for, which is using its ATM to build the NAV on the balance sheet and then go out and issue the credit. For most of the startup companies, that's what investors are cheering for right now. For those companies, they want them using the ATM because there's an acknowledgement of the scale. But at a certain point in this type of a strategy, you have to have leverage. Otherwise, you are not a leveraged play to Bitcoin. So if you get to this point, say we flip over into October, you got Bitcoin at 110, we get into the historically most bullish quarter for Bitcoin that you get in a cycle. If Bitcoin runs to 150, 200, and you have no leverage on the balance sheet, you're not going to get the same impact as a company that had that in place before the run started. So I think we're in this critical period of time right now where companies really need to focus on finding ways where they can get at least some levered exposure to Bitcoin on those balance sheets.
John, I'll hand it over to you for some thoughts and any questions you want to throw out there.
Yeah, first, this Strive Semler announcement was 4 days ago. This is super old news. I don't even know why we're talking about it. No, I kid. And you could tell that these guys genuinely love it because, number one, they worked so hard to get it done, but then they're also happy to just say, hey, I'll come talk about it. So yeah, great to see the genuine interest and passion from you guys. What else to say? Yeah, I think the point about zoom out for Bitcoin and things that we've been saying for many years, however long you've been in Bitcoin, has been lost with Bitcoin related equities. So I feel like that can't be said enough times. Even if you look at large tech companies, which have been the best investments in US capital markets history over the last 25 years, they're all going to have some period where they went down 50%. Look at Amazon's price history. There's multiple times that it went down by 50% over some time period. And that's a stock and a company that has revolutionized its industry and completely changed the world. And again, it's one of the best investments of all time. So things don't just go up and to the right. And Amazon has even done that after it became a proven company. Like, we're talking about an industry that's built on top of Bitcoin, which is still, I still think it's early, relatively speaking, for Bitcoin. Bitcoin is not nearly as well accepted as Amazon's business model. And then you have this Bitcoin treasury company industry that it's even earlier for. And people are still figuring out, like, we're debating right here. We're saying, like, what's optimal? How many of these should exist? How many in each capital market should exist? What's optimal size? What should the underlying business model be? 4 months ago, MNAVs were here. Now they're here. Like, this is a messy process of price discovery and of markets in a nascent industry. So none of this should really be too surprising. I know we would all love if we could put on a trade and just have it triple in 3 months and do it again the next 3 months, but life doesn't work that way. So yeah, the zoom out advice is good for Bitcoin, and it's good for Bitcoin treasury companies. And I would just say that is your opportunity, right? Because people don't realize this, then there are going to be people who sit on the sidelines and don't see that there is a company and a management team that has the long-term thesis. They put all the pieces in place, and that is how you find your next good, I'll use the word trade, even though I don't like, definitely not a day trade, but like your next good entry point comes when sentiment has completely shifted and you say, wait a minute, really nothing changed in my long-term thesis versus 5 months ago.
Yep.
And now there's this company with great people, great management team, great strategy that's trading 70% lower than where it was 5 months ago. There's your opportunity right there. So that's my big picture on this. But I do like the debate of what's optimal size, business model, how many are going to exist, things like that, because again, we don't know the answer. The market is figuring this out in real time.
I think that there's this desire to always jump way ahead. When we're this early in the process, right, you realize that strategy is the only one doing it at some level of scale. And when you look at the addressable market, you realize that scale they've achieved is absolutely nothing in those credit markets yet. And we tend to fast forward to how many can there be? And you want to put a number on it. And I look at an addressable market that's in the trillions of dollars, right? And I liked something that Saylor said, which was for everyone that's saying Bitcoin is going to fix the money, fix the world. To do that, you've also got to fix the equities. You got to fix the credit. You got to fix the money markets, right? There was all these other things that you also have to fix. What a lot of these companies are doing is they're embarking on the journey to start fixing the credit markets. And this is the first foot in the door. These are brand new products. We've only got a couple of quarters of these products even being in existence so far. So to try to look for the saturation point right now before these things have even really got rolling, where we've gotten more of them into the market. Now you've got more corporations that can start applying pressure to the ratings agencies to start looking at these because they're becoming more prevalent. We're at the start line on this leg of the journey. And for all the companies that are embarking on this, they're not focusing on 1 month, 2 month, 3 month type of outlooks in terms of how they're making their moves, because every move you make has to be methodical because you're deploying a strategy that's going to persist for decades, right? Every step you take today is going to have ramifications and compounding impacts over the next 5 years, 10 years, 20 years. And so these companies can't make rash decisions based on temporary market conditions. And I think that's what's missed a lot, is you want management teams to be incredibly methodical about how they deploy this. I know there's a constant tugging of needing to see action every single day, and metrics start to get created that incentivize shorter term execution and shorter term execution. But when you're using an infinite duration asset, you have to approach your strategy differently. And I think that's a really important message. So I don't think it's necessarily, it doesn't feel good, certainly, to have the froth come out of the market. You certainly love seeing the higher prices, but this is where things are going to reset and reground. And I've said this many times, but nobody wants to be a buyer when it's usually time to buy.
Yep.
And based on everything that I'm seeing out there from a sentiment perspective, it feels like we're pretty close to that point. People are in the it's over camp, even on Bitcoin. Meanwhile, we're cruising at 110,000 still,
and
which
Bitcoin's
a
dead.
year ago we would have been begging for. So
yeah,
it's early. It's very early innings, and there's a lot of game to be played, and this is evolving. And the products that are going to come out are going to evolve. The structures are going to evolve. The types of companies issuing them are going to evolve. And we haven't even got to the general acceptance of just holding Bitcoin in your treasury at some percentage, which I think is going to be one of the biggest impacts out there. These treasury companies that are reinventing these credit markets is massive. That's a massive shift in finance. But the broader acceptance for corporations to say, look, I don't have to go and try to engage in the capital markets and issue securities. But what I can do is take the value that's being created from this company that's had decades of operating to get to this scale, and I can start protecting that. And I'm going to start holding that value on the balance sheet. I'm going to stop dividending it out and surrendering my capital. I'm going to start holding that and creating long-term value and building that war chest so that I have it available for whatever I need to be next. It's that optionality that's so important, particularly in the age of AI. And I think when that wave comes and it no longer feels taboo for companies to just say, hey, we've got 10% of our reserves in Bitcoin, and that's our plan. That's all we're going to do. But we've got 10%. I think that's a massive wave that's yet to show up.